In this video, we explain the mortgage stress test, how to pass it, and if the recent interest rate hikes have actually made an impact. That's starting right now.
Welcome to Homebuyers School, brought to you by Brookfield Residential.
Hi everyone, welcome to another Homebuyer School video, a channel where you get the latest strategies, tactics, and tips from home buying experts. And remember, if this is your first time on this channel and you want to get the latest strategies from the experts, hit the subscription button below, hit the little notification bell so you don't miss anything. Now, today I'm joined by Mushtaba Syed, Manager Mobile Mortgage Specialist with TD Canada Trust. And today we're going to explain a little bit further on what exactly is the mortgage stress test.
Yeah, so the mortgage stress test is technically what we look at, what the Bank of Canada has come back to the banks to look at extreme what-if scenarios to see what happens if at a certain time mortgage rates have gone a lot higher than at the time clients have qualified, to see if they can still afford to pay their mortgage. So for example, if someone actually qualified for a mortgage and the interest rates, let's say 2.59 a couple of years ago, and at the time of renewal, now interest rates have dumped to 5.34 or 6%, whatever is available, and they have no choice but to renew at those rates, what the payments are going to look like. Can they really afford those payments? Keep in mind, we did have historically low mortgage payments for the longest time, and a lot of people were just on the brink of qualifying for their houses at that time at those rates. But those rates are not going to be available for too long. They might not be available when you come up for renewal. So the Bank of Canada and the banks also want to see that at the time of renewal, are you going to be able to afford that mortgage today, 5 years from today, 6 years from today, 10 years from today? So they actually put that stress test in as a what-if scenario to see, sure, the rates are not a certain amount today, but they could be in the future. Is there a guarantee? No, but there's a possibility. And they want to see that if you can afford the payments then you shouldn't be having any issues to get qualified today, and that you can afford to make your payments any given time. So that is technically, in a nutshell, what is a mortgage stress test.
So I know there's a difference between putting more than 20% down and less than 20% down, right? So we do have a video on the mortgage stress test actually explained in the video above. But I remember when we talked about it last time, if it's above 20%, you don't need mortgage insurance, right? But you still need to do the stress test. Mm-hmm. If you have less than 20%, you need mortgage insurance, but you still need to do a stress test, mm-hmm. right? Now, is the stress test different for either, or is it the same stress test?
Yeah, so stress test, when it first started off, the stress test was just for insured mortgages. So that means if you're putting less than 20% down, you have to deal with the stress test scenario. And then as of last year, they actually made that across the board for everyone. Whether you're putting 20% down or less than 20% down, everyone needs to kind of qualify. And in a way, it's an inconvenience for sure, but it's better overall for our housing industry and for the economy. So we feel like everyone can afford their payments. And then you're absolutely right, Carl. So the stress test definitely does differ. If you're putting less than 20% down, it's a very simple calculation. It's a simple formula to look at the Bank of Canada's 5-year posted rate and then qualify you on that, no questions asked. Now, if you're putting more than 20% down, they can take a look into a lot of different scenarios. They can take a look at to see what your term is, what term are you getting, and then they can charge you a 2% premium on top of that, or the 5-year posted Bank of Canada rate, whichever is going to be greater. So you definitely want to have that conversation with your lender to see, does it make sense for me to go with a 5-year fixed? If the 5-year fixed today is 3.6, 3.7, that's going to make my qualifying stress test at 5.7, which is a lot higher than the Bank of Canada's 5-year posted rate of 5.34. Or if you decide to go with something like a home equity line of credit product that we say, they could take a look at to see whatever your pricing is and charge you a higher 2% premium on that. Once again, a great discussion to have with your lender and your specialist to see what is best for you, and also kind of go into terms to see what's the best rate in term for your financial picture or your monthly budgeting.
So if you had a choice right now, let's say as a homeowner or potential home buyer, I'm deciding between putting down 20% or more, or less than 20% and getting an insured mortgage, is there advice on whichever one, or is it sort of really focused on your lifestyle and more personal?
Yeah, 100%. It's 100% based on your personal preference and your lifestyle and your budgeting to see what's available, right? Obviously, the more you put down, there's less interest costs. You don't have to come up with CMHC or default insurance premiums, which could be a lot, and then they're factored right into your mortgage. It means that now they're going to be you're going to be paying interest on that, and sometimes it's going to be compounding interest. Or you take a look at the fact that is now I don't have the 20%, but now I might need to save up longer, or I might need to have my family help me out or ask them for help or borrow to do a certain amount. And then you have to see if that's really worth it for you. Maybe buying a house today and getting a cheaper price, locking in a price today instead of waiting a few years to save up the extra 20%, you might miss out on the market. You might miss out on any appreciation your house can do in that time. So it's a very personal preference, but it's a great discussion to have with your lender. And if you can explain to them your concerns and your scenario, and they can advise you on what's best to do. Maybe sometimes it's not best to wait a couple of years to save up that 20%, and because maybe the appreciation in that time will be a lot more. Maybe 3 years from today, you can get a lot cheaper house, and that same house now is costing you a lot more, and haven't really done yourself any benefit by saving up to get that extra 20%. So once again, really have that discussion. Go with the personal preference, find out the pros and cons for both, learn about the products, and then decide what makes sense for you.
Now, let's say you're on a fixed or a variable mortgage rate. Does this stress test have any impact on you?
Once again, so it just really just depends if you're insured product or not. So if you're putting less than 20%, it doesn't matter at all. If you're going with a fixed or a variable, everyone will qualify at the 5-year Bank of Canada's posted rate. Now, if you're putting more than 20%, 100%, it will impact you. If you're going with a fixed rate, they're just going to charge you that 2% premium or whatever your fixed rate is. So if your fixed rate is 3.6, 3.7, there's going to be a 2% premium on that, which is going to be 5.7. Or if it's less, let's say it's 2.5 for a 5-year posted rate, they'll charge you they can charge you 2%, will be 4.5. But then at that time, they will look at to see what the 5-year Bank of Canada's posted rate is. So they look at the benchmark at 5.34 and whatever is greater than that. So if your 5-year posted rate is greater than the benchmark, that is is your stress test. But if your 5-year posted rate is lower than the Bank of Canada's posted rate, then you qualify at the Bank of Canada's posted rate. And for variable, even for a conventional mortgage, which is when you put more than 20% down, you always qualify at the 5-year posted rate. And that's just because with the variable, we just have no idea, right? They fluctuate, they can go up and down. So for us to use a stability stress test, we will just use the Bank of Canada's 5-year posted rate.
What income do you need to actually pass the stress test, or is there like an income level?
It really just depends. You can go online, you can see some graphs. What I like to do and explain to my clients and say, the best thing to do is to literally just come in and have that discussion, start a process, start the pre-approval to see exactly where you can qualify. There's a lot of guesswork that goes into it. There is some credit requirements that we take a look at. For example, if your Beacon score is at a certain number, it affects our ratios. If you're above 680, the banks can actually go to a maximum of 44% of your ratios. But if your credit is not the best, it's lower than 680, that ratio automatically now drops to 42%. And there's some other ratios we take a look at. So you can find these calculators online, you can find these graphs online, but it's not going to be a good indicator to see how much you can qualify with a new stress test. The stress test has really definitely impacted qualifying as a whole. The best thing to do is go in and talk to a specialist. Talk to someone who's a professional and who can advise you on what to do and really get a proper number done. Don't look online and then write an offer on a house. The worst thing we would want you to do is you fall in love with the house, you write an offer, and then you realize after that you don't qualify for that because you maybe not have met the credit requirements, or maybe some information you read online was not accurate enough. So definitely go in, see a professional, see your lender, see a specialist, and do a proper pre-approval process so you can actually, when you go shopping, which should be the most funnest part of the house hunting experience, is you can go in there with confidence, knowing that I know I'm approved for a certain amount and I can get that house.
Is there any way to avoid the stress test? Or that's your kind of...
Unfortunately not. No. There is no way to avoid the stress test at all. Every Canadian who's looking at purchasing a house has to go through the stress test. So the sooner we can recognize that and learn the benefits of stress test is an inconvenience, but overall, I think it is a benefit for the banks to have and for us to have, so we don't see a major financial crisis or a crash that we've seen happen in other countries, very similar to what happens with mortgages when people can't pay. So the sooner we get to realize that the stress test is not going anywhere, it's going to be around, the best thing to find out is to see how much can I qualify now with the stress test, and then kind of see maybe we drop down our purchasing price a little bit and see if we can qualify for whatever is comfortable for us. At the end of the day, we still have to end up making that payment. And a home ownership experience is a long-term experience, right? It's not you jump into your first home and that's going to be your forever home forever. Maybe you start off with something like a starter home and then you work your way up to see once your financial situation gets better. And the stress test can really help us kind of realize that and get to what our dream home could be in the future.
Now, finally, the last question I have for you is, has the recent interest rate hikes impacted the stress test at all?
Yes, they have. So if, once again, if you're putting, if it's a conventional product, if you're putting over 20% and you decide to go with a 5-year fixed rate, if the rates go up, like I said, there's going to be that 2% premium on top of your 5-year fixed rate. So that would actually raise your stress test as well, meaning it would actually change your qualifications and you would have to qualify at a higher rate. That means you might qualify for a little less. Once again, speak with your specialist, your lender, and see exactly where you stand even after the rates have gone up.
So my question for you is, has the recent mortgage stress test impacted your ability to buy a home? Let us know in the comment section below. Mo, do you have anything else to add?
No, I think that's great. Definitely reach out to your bank, go speak to your lender or your specialist and have that proper pre-approval done. So when you go shopping around, you can shop around with confidence.
And remember to watch our mortgage-related videos in the playlist in the description below. Thank you very much for joining us, and we'll catch you next time.
That's another edition of Homebuyer School. Tune in next time for more expert tips and tricks. And visit homebuyerschool.ca to bring you one step closer to finding your dream home. As with everything, it would be great if you like and share our videos. Also, please let us know if you have any home buying questions you want us to answer.